My dudes, making sure everything's all set up right. Notice the question, or at least the title was wrong, so I'm fixing that. Get your questions ready. We're going to be covering that here in a second. All right, I think everything's all up to date, my dudes. Let's go to the main camera. I'll bring this up. My dudes, make sure everybody can see me. I don't know if this, I updated Streamlabs and it now has a multi-stream option where I can see all the supposed chats at the same time, but it logged me out of Twitch. So all you Twitch folks that are normally able to watch the Friday live streams, you're gonna have to wait till next week. Because I'm not going to shut the stream down and restart it. So today is going to be a question and answer. I'm going to go through some of the things that people have asked us most recently, especially with this like run up in Bitcoin. I don't even know I'm using this because I'm actually on this because I'm going to switch over to the whiteboard today. And if there's questions that have technical in nature, architecture, design, those type of things, I'm going to make sure that are good to go. Also noticing my laptop is not plugged in from a power standpoint, so I'm going to get that plugged in as it is on battery power. Was using that earlier and it was not charging. All right, my dudes. All right, so you guys hear me loud and clear? Everything's good to go? We're going to peel back some of these questions that have been coming up recently with the run up in Bitcoin and just the other altcoins that are out there. People speculative mining, people getting their GPUs fired up. It's of course winter in the US and northern hemispheres. So people are using supplemental heat from their machines. Few other, just like dusting off a lot of already sunk cost equipment, things that have been set in shelves, and that sort of thing. And then a lot of people trying to figure out expansion of their existing operations, cost, mixed with maybe some alternative ways to use your power. If like you can get into some data center mining, that sort of thing, like for doing BitTensor, anything that uses GPUs or alternative uses besides just cryptocurrency, and then using those profits to buy cryptocurrency with it, that sort of thing. So I see a few people saying that they can hear us. Let's pull up a few of the first questions to kind of get it started of what's been asked most recently. And a lot of it stems from the last few weeks with us upgrading one of the existing sites with some legacy hardware when it comes to like the containers, and folks asking like how, when they're doing research on like 20-foot containers, 16-foot containers, like if you're talking something like a mining pods that are created by like Digital Shovel, that sort of thing, to more traditional container deployments, and most of them being built for 415, 240. A lot of people see us when we're showing, daily vlogs and that, of converting the containers to 480 and making those work on 480, 277, as a majority of the hardware these days support up to 277 power. And in the US, it's pretty prevalent if you're going to do 480 as your primary source of energy. And it's actually not that complicated. It's more of just working with your electrician to make sure you've identified the items in there that are 240 and things like the machines and the PDUs being able to handle the 277. The thing to understand is when you go up in voltage like this, and we've seen this with like Tesla and like the Cybertruck and the 48 volt architecture, is you can reduce the wire size. So like if you already have a container that's already set up for 415, 240, if you go up to 480, you don't have to do anything infrastructure wise with like the wiring. You're actually putting less of an amp load on the hardware in there. So you could actually technically come down on the wire, but it's already ran, so you're not going to just touch it. It just means that it's within the NEC compliance that will support 480. So then you kind of step that back and go, okay, cool. I don't have to change the physical wire, the copper wire that's in there. What do I have to change? And then you have to identify, you got lighting in one of those containers, you got potentially smart PDUs. You need to identify if those smart PDUs and the way they are wired. There's a couple different ways to wire those PDUs. Most of those PDUs are wired 3-phase, and then in their various banks. If you're looking at a PDU in a container, typically they have 3 separate banks of connectors. It could be, 8 to 6 connectors per bank on those PDUs. Each one will have its own separate line. So there's 3-phase, there's 3 lines, L1 through 1 through 3. Then you have a neutral and a ground. So the PDU could be wired one of 2 ways. It could be wired, there's other ways it could be wired too, but the primary ones are line to a single bank and a neutral, makes 480 turn into 277. You also have in situations like 415, 240, or 380, 220, which is more kind of European and like China configurations, where you could have a situation where your PDU is wired line to line, which then will create a situation where sometimes you'll go to 208 with that. So you just got to understand, like if it's a smart PDU and it's made for 208 to 240 range, is it wired line to line or is it line to neutral? So that's a real quick, you have an electrician look at it and see if this is your config on your particular setup. Like if you're trying to make it work for 480, if that works, then your primaries are all good to go. You don't have to change anything in there. You just got to look at the primary breaker inside of a container and see, it might be 1,000 amp, it might be a 1,200 amp or a 1,600 amp, and more like a 20-foot container as an example. And does it have the fault break up? Does it support 480? And what's its fault break level at? Which it'll say like something like 50 KA, which is just essentially like if something catastrophic happens at like the substation and it works its way down, or if you're working your way up, it's going to trip that appropriately. It's all about, do you have the right trip pattern on any kind of catastrophic failure? And you're just trying to make sure your points of disconnect are correct, right? So the electricians are going to just make sure, like, hey, if this thing goes bad, where am I going to trip first at? From the container outward and then the other way around. If you're taking something like 480 and you're going to just do 415, you'll have switch gear in between that, which will be your fault break there. And then it will go into another transformer. So it'll go from 480 to switch gear to 415. That 415 will be landed on your actual primary breakers inside your container. And then your container will handle the transition. And there's a couple different ways you could have the transformers kind of feeding each other with a step in the middle, and then have another set of switch gear that is setting up your pods depending on how your design is. We try to lean it out as much as possible and go straight 480 from the transformer. So it'll be like 12 460 volt primary from the substation to 480, and then that goes to the building or the container. And then our first point of disconnect is either a disconnect itself, a physical disconnect that's on the side of a building, which is usually something you have to comply with, or if you're on a container, it's kind of considered just another piece of network or power gear. You can go straight from the transformer secondary, straight on, landed on those primary breakers, which might be your 1200 amp or whatever. And then that fault break supports, within the NEC that's okay. Then you'll have your sub breakers for each of your PDUs, right? So it's all about the fault break piece there. And I know it was kind of a deep dive on the electrical side, but I tell you the amount of questions we get when people see us hooking a 415 container to 480. Most of the questions are, how are you guys doing that? And how is that legal? How is it safe? All those kind of things. And that's where I want to take you through is the electricians we work with look at the NEC and look at what is the requirement to meet and be compliant and safe, and then go through it that way. The V's world is saying, you're way too advanced. No one is watching this on this level, me included. That's fine, my dude. Well, I'm just telling you what questions are being asked, and I'm answering those questions. So V's world, if you have a different question or something more, simple, or something that you need explained more simply, let me know. I'm happy to do it. And it really comes down to the various questions that come in. This one was a more complex question on the electrician, and just like if you're planning a site out, you're going to need to understand those kind of things. Even if you're going to have an electrician do it, you could pay somebody and just say, make it happen, or you could understand on how it works. So that's what I'm trying to bring to you guys. Let's see here. You guys started bringing in some questions here. What PDU brand do you recommend? Really, especially in right now, what's available and does it meet the requirement? So what I'm saying there is we have bought various PDUs. I've had very good success with most every PDU I've had. I've only had a few that were kind of, I would say, knockoff brands, the Alibaba cheaper PDUs, and really the ratings on those, depending what they are, have a various setup. Hold on, guys. I'm going to pause you 1 second here. We're having a delivery right here. So we'll go into start here, pause. All right. Let's get set back up here, my dudes. That's the way that works sometimes. We have some of the team not here today. And we had a deliverer where I had to use the skid steer to pick something. So that was quick. We're back, my dudes. All right. Let's get into this. Let's see here. So Luke asked another question. I know we were talking about PDUs, but the PDU side of it, and don't worry, if you guys miss part of this stream, I'm going to take this stream, consolidate it down. So we'll cut out the little gaps here, and then come back to just straight to the point answers. So on the PDU side, at the end of the day, it comes down to what is your requirement. And from that, who can facilitate that within a period of time? So when we go out and put a requisition for a PDU, it's got to meet a certain, type of plug. If it's a C14 versus C19 versus PA45, depending what the PDU piece is there, and then who can facilitate it within the dimensions or wherever it's going. We have bought things from literally everybody. Zeus Mining, Kabuma Racks. We've gotten stuff from Luxor. We've gotten PDUs from everybody. And I have had only one PDU out of probably thousands ordered at this point that have ever gave me an issue, and it was replaced pretty quickly through Kabuma Racks. So most of the PDUs, as long as they have been they went through their normal vetting and they come with their certifications and stuff, they're pretty good. They're pretty linear devices. If you talk smart PDUs, that's a whole different thing. I typically don't use the smart PDUs in any capacity just because the cost doesn't warrant the output. Because you can get power. It depends on how you're trying to track your power. If you're a hosting person, it's going to matter to you, and you're going to probably want to meter it at each machine or a particular plug. But if it's just your site or client site and it's just one person, at the end of the day, the meter from the power company is what you're going to have to pay. You could try to challenge them on it, but at the end of the day, their meter is always going to reign. So having like smart PDUs and all that really doesn't do you any benefit. I would argue and say if you're trying to measure a profile on a particular machine's performance or what's the actual at the wall draw, do that in a test bench with one single smart PDU, get your profile understood, and then deploy that to your fleet with less cost PDUs. I mean, that's where I would go from that. But if you have one that works for you, you're welcome to share it in the chat and let us know. But yeah, the general answer is that whatever PDU works for you within the time you need it within your specification is probably going to work out for you. Let's go into this. I'm actually going to, Max Mining says, I'm actually going to invest about 150 to 200K Canadian into Bitcoin installation near my house. How would you realize this? This would require special electrical considerations, or will my power electric company do it? So what I would say is you've established your budget. That's great. Within that, your most important feature is how much you're paying for your power. So you got to find out, can you get 3-phase electricity somewhere? And within that located property that you're going to do, can you get a really decent power rate? To compete at any kind of scale in Bitcoin, you're going to need to be under that 5 cent all in, and that's US equivalent, the 5 cent all in rate if you're going to be, putting a larger deployment there. You're not planning for now, you're planning for any kind of dips in the market. And what ends up happening, and this happened just this year, is when Bitcoin started to rescind back into the high 40s, mid 50s, and difficulty had risen after halving. It had created such a crunch in the Bitcoin network that there was actually difficulty adjustments downward. So when you get around 4 to 5 cent all in pricing from your pricing models, when you're like costing out with how much rate of return you're going to have, when you get around that Bitcoin being break even on like latest generation hardware, let's say 25 joules per T. So that's like a S19 XP as an example. So that's a 140 terahash unit. If you look at that unit and you plug it in and you look at what your power cost is on that, and you look at if you were paying, let's say 5 cents all in for its power consumption, and there's calculators out there. You don't have to like invent the wheel here. Just go out to a Bitcoin mining calculator and just type in 140 terahash by 0.05 cent power cost. It should pull up like 1,400 or 3,300 to 3,700 watts of power usage. And it will give you a figure of how much your power is going to cost and how much that. If you were to go in there and look at it like from a home cost and you're paying 12 cents, you're going to see you're probably not profitable. So at 5 cents, 6 cents range, you're profitable right now. When the halving happened and Bitcoin was around 55, where the Bitcoin difficulty was at, you are essentially break even. And what ends up happening is the Bitcoin network, less people, a lot of people start turning off less efficient equipment, or if you're paying higher cost, and then only newer age units are replaced for existing hash rate. So you only have a net change of what the increase of hash rate, let's say a new 200 terahash unit was replacing, like, let's say 104 terahash unit. So you'll have that net change of about 100 terahash on the network, and your efficiency is a little better, right? So you're paying a little less for electricity for how much hash rate you have. That's all that really happens during like a real crunch in that time. So you're planning for the worst. So again, 200K that you're trying to spend, you first need to see where you're going to go, and you need to be really around that target range. In our particular area here, the minimum requirement is 750 kVA, which is 750,000 watts, which that would be like a single 20-foot container. So the local power company here will give you a 3-phase power rate, which is roughly 4.1 cent all in. If you're registered with this MISO is a cost avoidance element to peak prediction. So if you will register with that, you can get around 4.1. Otherwise, you're around 5.2 cents all in, which is still pretty decent. The minimum requirement is 750 kVA. So in your particular area, you need to, one, find out what's the power rates if you're a constant load of at least 750 kVA, because that would be the build cost of what you're looking at around spending. Is if you can get a small 16 to 20 foot container, those cost about 37 grand US, and then your power hookup and all that stuff's probably going to be around 16 to 20,000 US all in, if they're providing you the transformer, and then you have whatever your lease costs and all that is. So it'll cost you 80 to 100K to get that set up, like out of pocket. And then your other 100K you can put on towards miners. But you only want to do that if you're around that 5 cents per kilowatt. Otherwise, or if you're spec mining and you're buying like L7s or L9s or, DG1 pluses, something that has like script and it just has a higher rate of return right now, and your speculation on those networks, maybe you can work it out with better than 5 cents per kilowatt. But that's kind of where you need to be looking at, my dude. If we look at where are the people at with GPU mining these days? That's up GPU mining once ETH switched, V's World asks. That's a great question. So there's far less people mining on the GPU side. You can tell that by the GPU networks of where the effort go. So you have essentially Ravencoin being around the same as it's always been when it comes to amount of hash rate, about 5-7 terahash. You got people mining Flux. You got folks mining. Your Caspa switched over to ASICs. There's a few new tokens out there. Alphium went to ASICs also, but BitTensor is one that I'm looking at right now. If you have NVIDIA GPUs, because it's more of a complex setup than a normal just like multi-miner or nice hash. But it allows you to allocate those GPUs to support LLM model, like AI models, and you're paid across what subnet you're on. Which is, if you Google BitTensor, you'll see that. That's where some GPUs I know are going right now, if you're on the NVIDIA side. And then folks just spec mining, Furcoin, a lot of the other tokens that aren't necessary. You're doing it for making the money more than getting the crypto bag to see if those prices will go up, right? But it's a lot of spec mining right now these days on the GPU side. Let's see, are ASICs worth it, or do they lose value faster than they recover value? If you're talking about a brand new ASIC, that's a speculative rate of return. When we got into Bitcoin mining pretty heavily, I was in Bitcoin mining back in the day, like before even starting BitsBeTrippin, right? I was mining with GPUs on Bitcoin. And when we went to ASICs, we did some ASIC early with the 2014 videos, but then really a lot of that stuff went to China until 2021. When we came back into it, we were buying S19J Pros for $11,000 each. You can buy an S19J Pro now for $500. So it lost quite a bit of value. If you're getting into Bitcoin mining now, you can pick up a decently priced, SJ Pro 19, 120, the K Pros for around $1,100 and $850 to $1,100 a piece. That's way more reasonable. And just again, spec mining with that on Bitcoin. You could sell the hash rate to nice hash. You could mine a different network if you wanted to with those ASICs, but the barrier to entry is way cheaper. Again, you're going to need at least a 240. Oh, technically, you need at least a 208. It's not the best power to have for that, but you could get into that way cheaper price-wise. Your cost and risk is far less. And again, it ebb and flows with Bitcoin price. If Bitcoin price speculatively goes up to 200K in a short period of time, then those SJ Pro 19, 104s, 110s, 120s are going to be worth double what they are now, if not triple, right? So if you're buying it for $320, $380, you guys can see one of our last videos. Luxor has a shop. Shameless plug for them. If you go to the Lux shop, they show both used and new machines. New machines are going to be, if you do the algebra on it, it doesn't make sense, right? A new machine that's $4,000 might be a 220 terahash unit, but it's 15 to 18 joules per T, which just means that you are almost getting double the efficiency from a power cost versus your hash rate. So not only is it double the hash rate of a typical machine, so you go from 100 terahash to 200 terahash, you are doing it for half the wattage. So that results into the power cost you pay is way less too, right? So if something's costing you $70 a month for 100 and let's say 20 terahash, you could be paying that same $70 a month for 220 terahash. So you're getting like almost a whole other machine and not paying that power cost. So the algebra though is pretty high. I mean, you're going to pay anywhere from $3,300 to $4,000 for a new machine, or you can get some of the legacy machines for less. So if you have a way to subsidize your power in some way, you have, maybe some solar support, or you have wind, or something that is offsetting some of the power cost, along with you're able to like heat an environment where you don't have to use a heater and you can kind of subsidize some of that cost, then, being able to get into it and be part of the network is a way to generate capital. Let's see here. How do you go about finding suitable mining locations, and how would you approach the site owner, assuming that the power costs are good? That's from Polar Crypto. That's a great question. So typically, I do a couple things. When I'm site surveying a particular area, I'll find out who all the power providers are. Sometimes that's just one. But you got to understand there's power providers with people that actually create the power, and then there's transmission. So like in our area, there's multiple small power companies. One of them that we work with is Southwestern Electric. They are the power, that's who's billing you. Ameren is the transmission. So, and Ameren also can bill you if you're in certain parts of the area, but they kind of work in tandem, and they kind of work through what the cost breakdown is. You find a power company, find all the power companies in the area. You can, I don't want to say pit them against each other, but you can figure out who is willing to create a good rate for you. And then from a location standpoint, it's all about the load factor on particular substations. I always try to target to be as close as I can to a substation. If you're not ramping up over like several megawatts, then it's not as important, because the substation is a concentration of power. Downrange from that, let's say you have to find an old derelict building or something that has some transformers sitting outside of it, or a transformer sitting on the ground. you can find out pretty quickly if like they have enough power at that location. And then it's all about, can you get a good lease on that? Can you do some kind of shared ownership with somebody that has a lot of power, and get in there to get as part of those rates? So like looking for substations. Most power companies, I mean, the smaller ones don't have like a business development shop, but like if you call your local power company and find out who the business development people are and kind of just, let them know. Like 3 years ago, I would say be a little more exploratory, but don't give them all the information right away, just because you'll get shut down quickly. Like back in the day, you get shut down if I said, hey, I'm trying to mine Bitcoin. Most people's opinion of that would be like, yeah, sorry, can't help you. So we would just say, hey, we're going to be a large power buyer, 3-phase, high load factor, looking at opportunities, and you kind of cultivate that discussion. And at some point when they go, okay, what are you using this power for? Like, oh, I'm going to put it in a warehouse, or I'm going to put it in these containers, and we're doing some data center stuff. We're securing a network. And that's what I was using. You're not lying to them, but you're also not trying to let the stigma of the opinions of what Bitcoin is for some people. It's kind of like love or hate Tesla, love or hate Bitcoin, love or hate, marijuana, people that are into marijuana. Like it has a stigma to it for some people. So I try not to lead that as a part of the conversation. What's the core requirement? Core requirement is you need power, and you need a certain amount of it in a certain area. Find that, get that through, only keep it on that point. And then at some point you'll be like, hey, we're going to mine some Bitcoin with this. However, we got good structure here. It's all over the news, the CNBC. We got, ETFs now that are buying the coin. It's like, it's part of society. It's part of structure now. So the messaging has changed. The approach has changed, because now it's a lot more prevalent. So I would say find a local power company in a local area, find substations, and you see if you can get load factors or load reports on some substations, and then you can kind of start to branch out from those substations. And I mean, it goes as far as sometimes I look just overheads on like Google Maps and kind of zoom down in an area and follow the 3-phase lines. That's if you're looking up at the power lines, you see 3 separate lines. That's 3-phase service. And then you'll see like one line goes to your house because that's single-phase service. But at those triple lane, triple wire setups and the larger transmission lines, some of those are like the real big ones with like the metal and stuff. Those are more kind of long distance transmission lines. They're going from like a power station. And then those will go into a substation and step those down to smaller. Then you can follow those out, and you can effectively trace out where the load is going, and then you can see those particular areas. Once you have those areas, you can overlay it with like a Zillow, and you can figure out, okay, here's who owns these properties. And your key factors is if you're going to be doing outdoor mining in some sort, like if it's just a open air building, or if it's a container or stuff, you got to be conscious of like who's around you. There's a lot of factors, zoning factors, permitting, all those kind of things you got to consider. So just really, it's about, is there a load, and then where's it at and around, and what's around it, and what are you going to have to do? And typically stay out of bigger cities, residential areas. Just avoid it in general, and then look for those kind of austere, kind of outlying areas, and especially around commercially zoned or industrial zoned areas. Those are your kind of core marching orders to try to find something. Next, mining a bit. How to the week question: how will quantum resistance algorithms switch the BTC algorithm switch for BTC happen? Who's going to orchestrate that? So I think there's obviously a with Google's Willow coming out, which is a quantum. It's not just a quantum processor, but just that program in general. Approach strategy getting to around that 150 qubit to a 1500 qubit level is a way for it all comes back down to, is it an attack on Shor's algorithm or not, which is the public key cryptography structure. And circumstantially, SHA-256, if you could use Shor's algorithm to identify the private key from a public key. Based on just the brute forceness of that, we're still way far out, right? Millions of qubits, error corrected qubits to even get a remote chance at trying to figure out a private key. We're still pretty far, but let's say we get close to that. There is mechanisms in place. Let's say mechanisms and behaviors in place of when you get a security vulnerability on anything. This could be data center stuff. This could be government stuff. This could be HTTPS, if we just talk about the internet in general, RSA 256, 2048 bit, all those different encryption standards. There is a path to get those address those in such a way that is, I don't want to say controlled, but like people, when they see a risk and they hear about a risk, there's an incentive to say, hey, here's what I've seen. So let's say somebody's working in Google, somebody's working at one of these agencies that have access to state-of-the-art quantum computing. And they go, I think we made a breakthrough. Let's try to crack a Bitcoin address. Now, the responsible thing would be to do is not to go do something that they don't own, but to something they do own, right? So the behavior there, mind you, again, you're talking about a large company, you're talking about individuals that work at that company and lots of them. So then you're looking at, okay, let's attempt things against a range of different aspects. So they would take like a test stack, as it were. They would set up like a little test stack of computers, servers, and then they would point and try to attack that vector, right? It's setting up a test bench. So it might be RSA encryption, it might be a Bitcoin address that they create, put some money in. Can you crack it? It's almost kind of like like you're going through a little hackathon. If they're able to breach it and breach it successfully, then they would have a due diligence of responsibility to notify folks that are core developers for Bitcoin and say, hey, here's the deal, here's my proof. And this would all be done through responsible disclosures, right? There's a structure in place for this. So, and mind you, it's a big company that would have a big company, government, somebody that has responsibility, that they understand the impact that this would have if like you were able to crack Bitcoin. So like, let's say you're there at that point. Let's say 5 years from now, they are able to make breakthroughs in quantum computing. They're in millions of qubits and they're able to crack the current state of Bitcoin. Then that would be responsibly disclosed. And then a vulnerability report, essentially a BIP, a Bitcoin Improvement Plan report, would come out and say, we have a critical vulnerability. It has been proven. Now, you don't have to worry about just some rando picking that up and reverse engineering and going, oh, they found a way, because they're going to need the fucking quantum computer to do it, right? So that responsible disclosure would come through, it would go through a process, a BIP would be formed, and then a new node update would go and make an adjustment to either the underlying algorithm or make the least abrasive approach to making a change that would make it quantum resistant. So then, because you're also looking at the infrastructure, you can't just YOLO and go, hey, we're switching to whatever algorithm, because now you've just alienated every piece of infrastructure on the planet on it. So what it would happen is something that would be engineers, and they're already looking at this, they would look at, how can I take the existing ASIC infrastructure that is distributed, that's open source, and how could I make that backwards compatible with this potential change to the algorithm? And that would either be through some kind of reference or some kind of a foreign key constraint on the way it's architected, to where it wouldn't immediately destroy all make invalidate all the ASIC mining. If they get to a point where they say, hey, there's no way for us to do this, then I would see in the next future cycles that ASICs of the future would start to include functionality that would be quantum resistant, that meets a specification guide for a future potential Bitcoin upgrade. So that is the way I see it flowing, is that as we get closer to quantum potentials, that would crack something like Bitcoin. And this works across the stack, guys. This just isn't Bitcoin. This is every bit of encryption, end-to-end encryption, browser security, financial banking security, access control into systems, zero knowledge proofs, zero knowledge encryption. If you look at the architectures that are changing with like single sign-on and things that inherit credential control flow, all those kind of things would all uniformly need to be addressed, right? So, and that's where you get into like quantum resistant stuff. And I'm talking on this on behalf of, if you guys remember, and I try to cover a lot of the stuff that I go to, but like I was at IBM Think a few years ago. So IBM puts on this big kind of like conference. It's just like Microsoft Ignite and some of the other larger conferences. And I try to go to most of those that I can. And usually I'm taking you guys along with us on videos when we're doing that. But the one of the meetings at IBM Think was a quantum meeting that was on quantum algorithm resistance. And I literally sat through it, and they were going through all of the details that kind of make that up. And so all the stuff that I just said prior to this was not me making it up out of thin air. It was me projecting that information that came from that quantum meeting that was at IBM Think, which was, here's how responsible disclosures work, and here's how we're not just going to let somebody YOLO it and crack, Satoshi's keys and steal a whole bunch of Bitcoin. So the good thing is just like nuclear weapons, just like big things that require lots of assets and hardware to go do, is that it's not easy and not everybody can do it. And if and when something happens, there's a lot of structure around ensuring that it's done responsibly. So I'm not too worried about that, because what you're talking about is an individual participant that might be malicious and go attack something, and you're going to need access to a quantum computer and a lot of other people to make that thing happen. So I think it's, long story short, it's not a super concern, and I think there's structure to fix it. Sorry for that long-winded answer, my dudes. And the other guy that was concerned about me going deep, hopefully that wasn't too deep. You guys let me know. Let's look at some other questions. Thermal paste question. I have ASIC running behind AC Infinity fan and a MERV 5 filter replaced every other month. On the line since February 2023. What's the average lifespan of the thermal paste? So we have went 29, we're on our 29th month with some S19J Pro 104s. And I'm just now starting to see some thermal rise on some of those machines where the paste effectively is drying up. So we're about 29 months in. And that is in an outdoor, it's in a container, but it's an outdoor climate. So right there around that 26 to 30 months is when you'll start to see, and you usually will see this through either slow chips, like you'll start getting a slow chip air. And it's varying on, climate where the machines are at in a container sometimes. Ones that are higher up typically cook faster because they're absorbing more heat than the other ones that are on the bottom rack we've seen. It really comes down to just, the timing and just how long they've been running. But about that 30-month mark is when you start seeing some issues with that. And you can go through and repaste, and that might actually be a really good video of like just peeling that, because you have to be super careful when you're doing it. You got to kind of heat it up and then slowly peel that the heat sink off of those boards, and then either go back in there with some 3M heat transfer. I haven't put like Arctic Silver or anything like that in there to see any kind of thermal differences. It would be an interesting test. Like we used to do with GPUs of testing, the various heat transfer material and seeing what the difference on, C would be. But you're talking like, that's quite a bit of thermal paste. You'd probably end up spending about $70 in thermal paste to do an entire ASIC. But if you're trying to extend its life, it would definitely help. DIY solar farming. Mining 100% on solar in Central Texas, have 15 kW solar at the time with another 30K of panels installed, running Python script to automate the miners dependent on solar. Nice, my dudes. Batteries inverters to install next year. What's your take on running only during the day on zero margin cost for versus paying for power 24/7? I have no option for grid tie at the moment. If you have no grid tie, that means you need to do something with that solar. The folks that we've helped with solar typically look at what the rates are and this is super dependent on where you're at and if they'll buy your power and if you can get different rates on the power if you're on a flat cost. Most power companies want to just pay you just a flat rate. They don't want to pay the variables. Texas is a little different with ERCOT because they have those tranches that you can sell back during peak, and it ends up earning you more than what you could have done with mining. So it's interesting. You have to kind of commit to buying the tranche and you can sell it. I would say if you could get a grid tie, especially with ERCOT, I don't know what zone you'd be in ERCOT, but their blended power rates, especially in the evenings. So if you think about it, in the peaks are usually your days. So if you're solaring it on the peaks and then you're able to do grid tie and only buy the evenings, you're kind of doing a time of use. You can get those rates down to like 2 cents. They're pretty ridiculous if you can get a grid tie, because you'd only be buying the evenings when you're not being able to produce. And it would really be probably around 3 o'clock, 4 o'clock in the afternoon, I would assume, is when that would start to hit, because your efficiency will drop too much on the solar side. But I would say look at some of our prior videos where we've produced a model and have given you guys that model out there, and you could put your inputs in there to see if it makes sense. I would say the cheaper S19s, like if you look at like an S19i, that's an 88.5 terahash unit. I've seen those as low as $2.50, $3 a T. That puts you in that like $160 range for an S19. If you're not really super worried about efficiency, those are about 30. You can get those down to about 30 joules per T. If you optimize them, you'll be running about 64 terahash on those machines. So if you try to put it into a model, it's 64 terahash at about 2,700 watts. 2,200 watts. So 67 for 2,200 is not the best efficiency, but like that's kind of where your range is, and you can get them for about $180 out there. ASIC Jungle, there's a few other companies out there that have those kind of units. That's what I would look at. You have space here for up to 1 megawatt. If you're looking at 24 kW, so you might be able to get 2 or 3 machines on there pretty regularly. You're going to have some kind of battery to make sure that your input load to those miners stay pretty constant. You want to keep your power factor at around 1.0 if you can. That's where it is. Polar, Crypto, One Power Provider, Providence. Thanks very much. Now, what I would say is there's power companies in particular areas that service a whole area. And then there's sometimes smaller communities that produce their own power. I'll give you an example. This area, Southwestern Electric, Ameren, those are the 2 power providers. And then because of the way the non-regulated markets work, you can actually go to like Constellation Energy, which does this kind of like buy hedge across larger swaths of area. And then you could have Constellation also. But then there's local communities that actually produce their own power also. So like near where our HQ here is a town named Highland. And it actually has a small pond, call it a pond. It's like a small lake. And it actually feeds into a kind of a tributary river kind of flow. And they control that through just a small, like 8 megawatt hydro reactor, essentially. So it's like 3 little tiny, probably 12-foot flow over points, and they're producing roughly about 8 megawatts of power. And they're just doing it for their local city, and it like supplements the power there. But they don't always have the demand also, right? So working with like smaller communities that actually produce power 1 to 5 to 8 megawatts, sometimes you can find those in particular areas. And really, going onto forums in the particular area that you're in, finding out, calling the power company, say, hey, who do you have as power producers? So you got like the larger conglomerates like Providence in your area, maybe buying power from several different sources. It might get coal from one area, natural gas from another producer. Like our area is another example. One of the major input powers, we're about 56% wind power here. There's a huge swath of wind power on both sides of Highway 55 all the way to Chicago. Illinois is a net overproducer of power, so they have all this wind power that they don't always use. And that was part of the driver that got us to be able to establish a good rate in this area, is literally I knocked on the board's doors of the power company and was like, hey, you guys want to turn those windmills on? And they're like, technically we don't own them. British Petroleum owns them. I'm like, oh, BP owns them. Cool. Well, do they want to sell the power? And they're like, well, we buy tranches of power from them. So then it was a string of events that was like, hey, you guys want to turn on some power? We provide the demand, and then they put us, it's not a PPA, which is power purchase agreement, but it's just a rate. And then that rate has a minimum demand. And on 5 megawatts for this area, you have to have a minimum demand of 1.5. I'm going to get charged 1.5, use it or lose it. So that's the hook for the power company, is that I will pay them 1.5 megawatts of power, use it or lose it, right? And that's cumulatively. So there's some months that, when we're ramping, we'll be at like 750 kVA. And by the end of, the end of the second month, we'll be at 1.5 on a particular site. That's fine. They give us a ramp period. But like when Bitcoin was 55K and difficulty was rising and we were in low power mode, that site that's like normally 5 megawatt was setting at like right at 2. So we were still 500 kW over where we needed to be. But like, that's the kind of stuff that I'm talking about, is like, those are the examples of finding out who is a power provider. So in this particular area with that local company that has, power production of 8.5 megawatts, they will sell it back to grid, right, on market. So there might be opportunities where you only see your Providence as this example here, Polar, but you got to find out who's the power producers, because you may be able to go to them directly and say, hey, I want to set up literally a box potentially on their property and say, give me a lease. Let me take this little corner. If you can provide a transformer, great, but let's set up an agreement where I'll buy power from you for the next 2 years at a certain rate. And then you don't have to sell it to grid. You can sell it to me. And we'll make this arrangement. And then most of them, depending on what kind of regulated market it is they would have to give that as an open opportunity to everybody. Great. That's the way ours is. Anybody can come to our area and ask for the same deal that I have, right? It's a published deal. So then it's a matter of working with the power company to find a location, purchase land potentially, maybe sublease some property that they have. That's the kind of stuff I'm talking about. So it's power producers. It just isn't the power company. Sometimes you can go to the creator and work a deal directly with them. And yeah, it'll save you some money. And who knew the opportunity was there until you go out there and ask. But that's some of the discoveries that we found. I hope this is good for you guys. I mean, it seems like they're great questions, my dudes. I want to make sure I've answered. I see. I'm going to scroll back up while I'm waiting for more questions here. Let's make sure I've caught everything here. I did miss one from Ernie. Let's see. Given that the stock market is buying a lot of BTC, do you see the price of BTC manipulated more in a bad way, or will BTC have similar logarithmic like the past 4 cycles? I think a couple things are going to be pretty. And this, I think, feeds into where Michael Saylor and folks that are extremely bullish, looking at like $13 million Bitcoin price after 2045, as they are looking at that logarithmic kind of growth. But let's set with the realities of what's going on right now. The realities are 450 Bitcoin are being produced every day. There is far more volume of that being movement in Bitcoin every day. Of the 450 Bitcoin, and you have, let's say, 50% of the market being publicly traded companies that have HODL plans, not all 450 of those Bitcoins are hitting market. They are being held by companies too. the real analysis is, as that time goes on, how much more stops inflating into potential buy market, right? So if you're looking at Riot blockchain, you look at most of them, because they're publicly traded companies, produce their reports every month. So you see how much they mined, you see how much they held from that, and how much did they either sell or borrow against it. So most of them are now trying to keep all the Bitcoin they have, and they're borrowing capital based on the assets they've deployed, right? And there's some risk, obviously, and then they have that in stock price and all that. That's part of the reason of going public traded. You have more access to capital. You can, create convertible notes based on your assets. There's things you can do financially to extend your cash flow to hodl your product, right? The product in a Bitcoin miner is the Bitcoin itself. So what I'm saying is less and less Bitcoin is hitting the market, and that's helping drive some of this. And if you look at this, what they call stock to flow, if you look at the Bitcoin exchange flow to market, there's less Bitcoin on the order books than ever, right? It's continuously going down because there are the ETFs buying coin, and it's not just the legacy exchanges having supply on the exchanges exit. It's also a lot of OTC buyers that have older Bitcoin wallet holders that are like, you know what, how big does that number need to get before I move it? And some of that's happening, like where you have the sailors and folks working and brokering deals out there right now of legacy Bitcoin holders. And then it's just point to point. We don't see the market effect of that. Essentially, it's transferring ownership without impacting price because they're making the deal outside of the market. They're not sending it to market because they're reducing fees. They're not having a shock in the market. So what I see is a continuation of it going up as it becomes more and more legitimized as a asset class on its own, where people will diversify a portion of their wealth into Bitcoin. And with less and less, over the halvings happening, I see it continually growing. And this is the same kind of stuff we've been talking about since 2013 on this channel. Is that, hey, as less become available, supply dries up, Bitcoin goes up. That is, and again, that is detached from mining, right? So if we look at mining in general, it's detached from mining. Has really nothing to do with what the price is, short of if it was just flowing straight to the market, and is there not enough demand and it drives it down? There's not enough Bitcoin produced every day these days to meet the demand. So the only demand is being done by people that are willing to sell their Bitcoin and some market games. Are those larger entities going to play the market games? Are the market makers going to be dumping price, taking risk on longs and shorts? That's kind of what the market is designed to prevent, of huge pumps and dumps. As Bitcoin becomes more stable in those environments where they lock it up, there's going to be less and less fluctuation because the Bitcoin's going to be so expensive, right? They're not going to be able to move 10,000 Bitcoin at a time like that without having huge market impacts, right? So, or, huge costs. It would cost billions and billions to do that kind of game. Where back in the day when Bitcoin was $1,000, $2,000, somebody with 10,000 Bitcoin could play around with it and move the market, 20%. So yeah, I think it becomes less and less volatile because of that. And I think that's a lot of what the market folks are saying in general, is that it will become less and less volatile and just keep ratcheting up because of the supply reduction of the inflation side. So I'm, again, cautiously optimistic on the long term of this. I think the experiment that started as Bitcoin of like, does, the Byzantine general theorem, blockchain, distribution model that Bitcoin has from a scarcity standpoint, does that concept play forward? We've seen mechanically it works. It's anybody can independently verify the code. There's never been a hard fork, a community hard fork. There was some there was a restart back in the day, early, like late, early 2010, when there was a potential inflation bug with Bitcoin, where there was some stuff between, Bitcoin was in a handful of people's hands at that time, where they had to make a fix. So they kind of worked in production for that. But since then, there hasn't been any major kind of issues with Bitcoin. And I think that strength and risk has got it to where it's at and where it will continue to go. Let's see here. Latrell, thanks, my dude. I try to explain these in different angles. All right, my dudes. Well, we've been rolling for a bit now. We're just over an hour. I'm gonna, I think, wrap this one up. Hopefully, you guys found this valuable. It was quick. I know it was a quick hour. And part of that was with my delivery, but we will get this crunched down and reproduced out there for YouTube and X if you missed it, and just be straight to the point with no gaps. So hopefully you guys enjoyed this one, and we'll see you guys next week. Awesome, my dudes.